Good morning. Welcome to the morning market briefing. Today is 6/26/26. Another palindromic day.
Feels so good. It's actually, and I have to inform everyone that I missed it. I think I've gotten it every year on the podcast, but I missed it yesterday. We missed half Christmas, so let me be the first to wish you.
Day.
Yeah, half Boxing Day. Tough day for me. Big L.
Well, another one that's getting punted to next year potentially. You'll have to wait. Is OpenAI's IPO. I'm not actually that surprised by this. It seemed like they were doing a little bit of a Me Too after Anthropic came out with its IPO plans. About a week later, OpenAI filed for its IPO confidentially. Regardless, I think the earliest they could have done it would have been in the fall. But with Anthropic coming public, and you also have Databricks, and you still have a $1.9 trillion of SpaceX stock that's going to flood the market over the next year, but especially over the next 6 months. OpenAI is being asked by its advisors, including Goldman Sachs, you might want to just push it to 2027 because there aren't going to be IPOs in the end of the year. Even investment bankers, especially investment bankers after this year, they don't need to make a year. They'll just let it roll into next year. And I think that all of the investment bankers will be very happy to have a very flashy Christmas where they don't actually have to work on an IPO. So I think that this is probably good all around. It's probably also good for the market. Tom, I'm curious if your thoughts, it is impacting the market today, even though I don't really think it should, but you have a lot of the AI ecosystem, including companies like Micron, which was up a lot yesterday, down this morning because they're like, well, is it going to take longer to get our money from OpenAI?
I mean, they're going to have to, one, it's less money in the pocket of OpenAI, right? Because they do get compensated for that IPO. So that's money that could have been spent to flow through to Micron or SanDisk or SK Hynix or one of those companies. Though I will say the interesting thing is, the heat map continues to shift pretty quickly in the AI space, and it's almost like the ultimate end product, which is these LLMs, has really lost a ton of steam, even in the last couple weeks. And even this morning, just kind of getting up to speed on what's going on, there's the new thing is that memory chips, old and busted, substrates, new hotness. And you'll have to explain to me exactly what that is, but apparently the new bottleneck in the AI space is going to be substrates, which I'm assuming is just the inputs to the memory chips. So call it silicon and rare earth metals or whatever goes in there. I wouldn't claim to know what those are. But Ben, you used to be the lead analyst on CCMP, which is now owned by Integris, they made slurries, which I would imagine is similar to a substrate, if I had to guess.
Yeah, I mean, they're absolutely ripping. Thomas brought it up the other day, but Japan is shuttering all of its factories there. So Integris is tripled in probably it hadn't done anything for about 4 years, and now all of a sudden it's just gone through the roof. So that's what's going on there. But it's interesting to follow that. I think that, and I write about this in the market memo today that'll be out a little bit later for clients, but I think I'm very curious to see what happens with these companies with quote unquote impenetrable moats. We've talked a long time for many years about the Mag 7 and having these just unbelievable moats where they have control of the means of production. They have basically unlimited pricing power as well. And we're seeing all of that kind of come into question right now with the spending on CapEx and the capital intensity that's going on with the likes of Google and Meta and things like that. But now also on the memory chip side, you're even having to see Apple raise prices fairly significantly on iPads and Macs because they're just getting worked by Micron, who's just letting it all drop to the bottom line. We talked about 86% gross margin, about 80% net margin for a commodity product. I'm curious to see what happens because I don't think, you might have some of the nicer tech companies or the less aggressive tech companies like Microsoft, and people are like, well, Apple is the toughest company. Apple and Amazon will kill you if they don't, if they feel like you're trying to put a hard bargain on them. They don't want to be the ones who run a hard bargain.
And Meta as well.
And Meta. And I would not be surprised to see them kind of either start their own memory chip company. I could see Elon doing his own memory chip company because none of them want to get worked by a commodity. I mean, they're like, how on earth am I making a 45% margin on an iPhone when I add all this technology and all this value add, and this company has just raised prices by 10x on something that is I've always perceived as a commodity.
Yeah, it's the bottled water of the tech space.
Yep.
I mean, for the longest time, companies like Seagate were dead in the water because like memory was old news. Like hard drives are getting smaller and more efficient, and nobody cares what they are. It's like, and now you can't buy one of those because they need them for these data centers and they need them for running these large language models. And like they were just dead on the vine for a decade. I mean, Western Digital used to be an all-time values trap stock, and it's up I want to say more than 200% this year.
Mm-hmm.
So it's pretty interesting. But I mean, there seems to be a lot of new entries, even like think of having a deep moat, Kalshi, which was like a $12 billion company in January. They're raising capital $80 billion now. But then DraftKings is launching a betting market, I think this morning. And then there's rumors that Meta's about to launch one called Arena that's going to be plugged into Meta AI and your Facebook and your Instagram. And let me tell you, they've got a lot more information on you and how to entice you to do things than DraftKings does. And so their cost of acquisition for new clients is going to be dramatically lower. And the product is the product. The betting markets are the betting markets. And all you really need is volume. So if you can get everybody who's got a Facebook and an Instagram to start making bets, then you can just scrape money all day long. So, I mean, it's interesting. Yeah, there's so many different things that are new and hot and garnering a lot of people's money. But, first movers are getting crushed all over the place. I mean, OpenAI is getting just danced around by Anthropic, and then Perplexity seems to be right behind them. Kalshi and like Polymarket begot Kalshi, and now you've got two more entering the market sometime in a short period of time. Suddenly we're going to be in a perfect competition because you're selling the exact same product, and pricing is going to be key. And if you've got scale like Meta does, you can probably just pants everybody. So it's interesting. It's an interesting environment right now. Nothing is certain, it feels like.
Yeah. I mean, and everyone's talking about how Micron's just locked in on these I would be,
for now.
Yeah, I would be concerned about that.
I mean, Coke used to make unbelievable margins on Dasani when bottled water hit the streets, when they were rolling out 12 packs of canned water because people didn't drink water. I mean, drinking water was considered something that would make you cramp when I played sports. And then suddenly everyone's walking around with a bottle of water. And now a bottle of water is a bottle of water is a bottle of water. I mean, you walk into a gas station, you just pick one. If you think you're getting something better, you pay an extra 50 cents for a smart water when it's really just packaging. It's all the same stuff.
In fact, you can't even make any money on water now. You're just selling the bottles.
Yeah, exactly.
For $50.
Yeah, you're just making margin on a more expensive bottle. The margin's probably the same for smart water as it is for Zephyr Hills or Deer Park or any of the lower quality waters.
Keeping in the chip space, On Semiconductor is acquiring Synaptics in an all-stock deal. It's supposed to be done at a 20% premium to where Synaptics was trading, but On is down 15% today, so it's really only a 5% premium.
Oops.
Deal's supposed to close middle of next year. Synaptics has been around for a very long time. I think I owned it once, maybe like 15 years ago. Briefly, they made a lot of like the touch sensors and fingerprint readers for iPhone and other devices like that. They also have they're really trying to lean into this edge AI and have data at the edge that they're feeding back through. So things like pressure, and I think it does fit well with On's business, which is an analog company. But right now, Synaptics is very consumer faced. From my perspective, it's expected to grow 9 to 11% a year, and so On is basically buying the company, thinking that it's not going to remain that type of company for a long time. In fact, they're buying the company as a play on robotics. And I actually think that's fairly smart, but the market doesn't like that because it means the return on investment isn't going to happen for another 5 years. And that's if robotics comes as fast as people think. But that's the thesis of what they're doing.
Yeah, I mean, until something changes, robotics seems like autonomous cars, which is something that was a hot topic in, 2010, and is now just sort of in its infant stages. So you can assume maybe 15 years from now, this could be an accretive investment, which, in terms of today's dollars, is probably a net loss.
Well, what's interesting about autonomous cars is I think that people thought that it was going to be sold as a subscription and it was just going to be almost like driving as a service.
Yeah.
And instead, what it's turned into is just competition for Uber and Lyft,
which also barely existed at the time.
Yeah.
And wasn't public, and were really hot private equity stocks
Yeah.
that ultimately cratered initially because they weren't profitable when they went to market.
Yep.
Which, it's a lot similar. It's a lot like the AI situation now with OpenAI and Anthropic. So,
on the economic side, I've done a lot of looks at more like data on pull-in demand and how much data was pulled forward ahead of the World Cup, and I still think it was probably a little bit more than people are giving it credit for, but the Port of Long Beach says that inventory pull-ins were only up like 5 to 7%, which was actually about half of what it was last year in terms of the amount of inventory that's pulled forward ahead of demand. So obviously last year had the tariff impact. So I'm a little bit more confident on that. I'm also would take note that FedEx Freight reported last night, and they said the demand has improved sequentially. So overall, I think the economy is doing fairly well. And I think if we get a little bit more relief on interest rates, what's interesting is Bank of America also put out a survey. They went around for the last couple of years and asking people, is it better to rent or buy? And for the first time in 3 years, people say that it's better to buy. And probably even more than this is that a lower percentage, I think it was 77% last year, only 70% this year are saying, I'm waiting for interest rates to go down to buy. People now is basically saying, you know what, I don't love the price, but I'm sick of tired of waiting for interest rates to go down.
I mean, we've had a full market cycle now of high interest rates. We're 4-ish years in. I mean, at that point, it starts to become the new norm.
Yep. So, and low and middle incomes are improving, and I think that's also helping as well. We talked about I do get consumer confidence on Tuesday. Tom, what else are you looking forward to next week?
I'm interested to see, at least for this afternoon, where University of Michigan comes in on inflation, because there's got to be some expectation that it's coming down now that oil has dropped. There just has to be. Are we going to get a deal next week? An actual deal? Do we have a deal with Iran?
I think we have a deal. As long as they're not blowing up our ships, which they tried to do yesterday.
I'm just looking to get through the weekend. Looking forward to next week is like, it's like looking forward to Christmas on half Christmas. Yeah. Anything could happen between now and then. So we'll see what Monday morning looks like. But Monday morning this week looked like we didn't have a deal. Hormuz was shut, and yet here we are sitting at the lowest oil prices we've seen in 4 months on Friday. So I'm just gonna go into the weekend with a clear mind and come in on Monday with whatever's happened over the weekend. I think that's my move.
All right. We'll leave it there. Have a great weekend. No call next Friday. Markets are closed in honor of Independence Day. Obviously,
Woo.
July 4th is on Saturday, but we get a bonus day.
Doesn't matter.
All right. Have a great weekend. Enjoy the weather. Bye.